The story of the Dutch East India Company, better known as the VOC, is one of the most incredible business stories ever told. At its peak, it was the richest company in human history. Adjusted for modern value, historians estimate that the VOC would be worth trillions of dollars today. It controlled trade routes, commanded armies, built forts, minted money, signed treaties, and even had the authority to declare war. Yet, despite all that power, the company eventually went bankrupt. So how did the most powerful corporation the world had ever seen collapse? The answer involves monopoly, corruption, greed, violence, bad management, and one of history's most brutal quests for profit. The VOC's rise began with the Dutch search for direct access to Asia's spice trade. Early voyages were incredibly dangerous. Sailors faced storms, disease, starvation, and hostile conditions. One expedition returned to Amsterdam with only a small fraction of its original crew alive. Out of 249 sailors, only 87 survived the journey. Financially, those voyages barely turned a profit. But profits were not the most important thing yet. The Dutch merchants had discovered something far more valuable. The route worked. Once word spread, merchants across Amsterdam rushed to join the spice trade. Within a few years, dozens of ships from competing Dutch companies were sailing toward Indonesia. Everyone wanted a piece of the enormous profits generated by spices such as nutmeg, cloves, and cinnamon. The problem was competition. Dutch companies started bidding against one another in Asia, driving prices up. Then they flooded Europe with spices, pushing prices down. Instead of maximizing profits, they were hurting each other. The Dutch government stepped in. In 1602, it forced rival companies to merge into a single organization called the Verenigde Oostindische Compagnie, or VOC. This was not just another company. The government granted the VOC powers normally reserved for nations. It could build military fortresses, raise armies, wage wars, negotiate treaties, mint coins, and execute people. It became a corporation with the powers of a state. To finance this giant enterprise, the VOC introduced another revolutionary idea. It offered shares to the public. For the first time in history, ordinary people could invest in a major company. Merchants, bakers, widows, craftsmen, and servants all bought shares. Investors poured money into the business, hoping to receive a portion of its profits. In many ways, the modern stock market was born, and investors wanted one thing above all else: massive returns. The VOC promised exactly that. Its strategy for delivering those returns was simple: control the market, destroy competition, create monopolies. Nowhere was that strategy more brutal than on the Banda Islands. Today, the Banda Islands are part of Indonesia. In the 17th century, they were the only place on Earth where nutmeg naturally grew. That made them incredibly valuable. At the time, many Europeans believed nutmeg could protect them from disease and even cure the plague. Those beliefs were largely false, but demand remained extremely high. Nutmeg became one of the most valuable commodities in the world. For centuries, the Bandanese people freely sold nutmeg. They traded with Chinese merchants, Arab traders, English buyers, and anyone willing to pay a good price. The VOC hated this system. The company wanted complete control over the nutmeg trade. Dutch officials demanded agreements that required the Bandanese to sell exclusively to the VOC at extremely low prices. Unsurprisingly, many islanders refused. Why would they accept lower prices when other buyers offered more? Tensions quickly escalated. Dutch officials attempted diplomacy, but the real goal was always monopoly. Eventually, violence erupted. When Jan Pieterszoon Cohen became Governor-General of the VOC, he adopted an uncompromising position. He believed negotiations were wasting time and reducing profits. His objective was simple: If the Bandanese would not give the VOC a monopoly, the VOC would remove the Bandanese. In 1621, Cohen arrived with approximately 1,600 soldiers and hundreds of mercenaries. What followed was a massacre. Villages were burned, food supplies were destroyed, people were hunted into the mountains. Anyone suspected of resistance faced execution. One notorious incident involved the public execution of dozens of local leaders in front of their families as a warning to others. Before the invasion, roughly 14,000 Bandanese lived on the islands. Afterward, only about 1,000 remained. The VOC had achieved its monopoly. But it had also created a new problem. Most of the people who understood how to cultivate nutmeg were gone. To keep production running, the company imported enslaved laborers, convicts, and workers from other regions. The Banda Islands became plantation colonies dedicated almost entirely to generating profits for Dutch investors. The system was incredibly profitable. The VOC could acquire nutmeg for almost nothing and sell it in Europe for enormous markups. Shareholders in Amsterdam saw dividends increase. Stock prices rose. Investors celebrated. Very few asked where the profits came from. As long as returns remained strong, most people looked the other way. Meanwhile, the VOC expanded throughout Asia. Its headquarters in Batavia, modern-day Jakarta, became the center of a vast commercial empire. The company controlled key ports, trade routes, and strategic choke points. Ships moving through important regions often had to deal with VOC authorities. The company discovered another powerful source of income through intra-Asian trade. Most Europeans arrived in Asia carrying silver and gold to purchase goods. The VOC developed a more sophisticated system. It bought products cheaply in one market, sold them elsewhere at a profit, and then used those earnings to acquire highly valuable exports such as spices, silk, tea, and textiles. By the time ships returned to Europe, much of the cargo had effectively been financed through profits generated within Asia itself. The system worked brilliantly. For decades, wealth poured into the company. At its peak, the VOC operated around 150 merchant ships and 40 warships. It employed roughly 50,000 workers and maintained thousands of soldiers. Dividend payments were enormous. Investors believed they had discovered a machine that produced endless wealth. But beneath the surface, serious cracks were forming. The first major problem was governance. The company was controlled by a small group known as the Heeren 17, or the 17 Gentlemen. They provided limited transparency. Shareholders rarely received detailed financial information. Instead, investors were reassured that everything was going well and that dividends would continue. Without proper oversight, accountability weakened. Distance made the problem worse. The company operated thousands of miles away from its leadership. Employees quickly realized that monitoring was weak. Private trading was officially prohibited. In reality, many workers ignored the rules. The company frequently ships personal cargo belonging to employees. Managers used their positions to enrich themselves. Resources disappeared. Profits were diverted. Corruption spread throughout the organization. The VOC attempted to stop it. Rules were introduced. Threats were made. Punishments were issued. Nothing worked. Eventually, the company shifted from trying to eliminate corruption to trying to tax it. That decision revealed how deeply the problem had become embedded. At the same time, operating costs kept increasing. Maintaining forts, armies, colonies, ships, and administrative systems required enormous spending. The VOC was no longer just a trading company. It had become an empire. Empires are expensive. Military campaigns consumed huge amounts of money. Conflicts across Asia drained resources. Yet, despite mounting costs, leadership refused to reduce dividends. Investors had become accustomed to large payouts. Executives feared that reducing them would damage confidence, so instead of cutting payments, the company borrowed money. Debt steadily increased. Financial problems were postponed rather than solved. Meanwhile, global competition intensified. The English East India Company emerged as a powerful rival. Unlike the VOC, which remained heavily dependent on spices, the English increasingly focused on Indian textiles and tea. Demand for those products grew rapidly. The English became more efficient and more profitable. Then came another devastating blow. The VOC's nutmeg monopoly began to collapse. For years, Dutch authorities carefully guarded nutmeg trees, but eventually French smugglers succeeded in obtaining live seedlings. Those seedlings were planted elsewhere. Nutmeg cultivation spread beyond Dutch control. Alternative sources entered the market. Supply increased. Prices fell. The monopoly that had generated extraordinary profits for decades suddenly became far less valuable. One of the VOC's greatest advantages disappeared. The company was now burdened by corruption, debt, military expenses, declining monopolies, and stronger competitors. Then Britain delivered another hit. During the late 18th century, British naval forces disrupted Dutch commerce, blockaded ports, and targeted VOC shipping. Trade suffered, revenue declined, financial pressure intensified. The company's weaknesses could no longer be hidden. By 1799, the VOC owed approximately 134.8 million guilders in debt. The richest corporation in history was effectively bankrupt. On New Year's Eve of that year, the company was officially dissolved. Its assets passed to the Dutch government. The VOC was gone. Its collapse offers important lessons. Monopolies can create short-term profits but often encourage complacency. Lack of oversight allows corruption to flourish. Prioritizing investor payouts over long-term stability can destroy financial health. Debt cannot solve structural problems forever, and no organization remains untouchable when competitors adapt faster. The VOC also demonstrates the human cost of unchecked corporate power. Many of its greatest profits were built on violence, forced labor, exploitation, and colonial domination. The wealth that enriched investors often came at an enormous cost to local populations. In the Netherlands, the VOC was long celebrated as a symbol of exploration and prosperity. Only much later did broader discussions focus on the suffering that helped generate those profits. In the end, the richest company in history did not collapse because it lacked money. It collapsed because it became addicted to monopoly, tolerated corruption, ignored warning signs, accumulated debt, and failed to adapt to a changing world. The VOC spent centuries building an empire, then it slowly destroyed itself from within, and that is why the richest company in history went bankrupt. Like, subscribe, and comment below for more stories about history's biggest business empires, spectacular collapses, and the lessons they left behind.